Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, March 1st, 2019. Want to do a video for members here, quick update on some of the things I'm watching. I originally was going to, and I'll get to these, do a video just covering the 11 sectors in the S&P 500. If you follow me for a while, you know every now and then I like to take a look at those sectors. Some obviously have much higher weightings than others, so they have more of a significance, and kind of gives a feel where the broad market might be headed, what's going on, and if also, if nothing else, opportunities. There are times where all 11 sectors are moving in concert, but in synchronicity, but there's other times where they're not, and there's trading opportunities against the primary trend, whatever it is, long or short. So I'll get to those in a second. Before I do that, I want to do an update. This one, I want to start here with coffee. I put a lot of time into that post on the setup for coffee the other night. Don't always take such an effort to lay out so many details in the case for the trade, but and let me say this: even some of the best looking trades sometimes just don't pan out. So take it for what it's worth. And again, that's what stops are for. But I do like this one. It has now triggered a long entry. I just posted that in the trading room, so I wanted to go over the charts here. Here's that 60-minute chart of coffee futures I was watching. You had this downtrend line, a little choppy action through it recently, and then in the update this morning, I mentioned the $1 level. Remember, that's the long-term chart that I posted. I haven't pulled it up for this video. You can just reference, go to the front page, go under trade ideas, long setups, which I'll recategorize this also as a active long now, but it shows the long-term support level at $1. It's a key level, psychological level, whatever you want, and that's where coffee futures are now at. These coffee futures are through, this chart's through investing.com. I don't know, they price it, they move the decimal over, it shows 100 instead of $1, but I'm trading KC now, and it is at right around the $1 level. And again, that's just a key long-term support level for it, and so I just wanted to reiterate that you have a breakout. First breakout didn't really stick, kind of went through the line, and now an impulsive move up today, and I like to see this impulsive buying. Again, the case was already laid out there, so let me not spend a lot of time on making the case here. Just to mention that the official trade has triggered. If you're trading futures, here I might have another chart on Interactive Brokers already mocked up here. Yes, I do. All right. So this is Interactive Brokers. This is also the continuous contract, which is the same one you want to trade now. The Maze or the continuous futures contract. They just loop together each contract as it rolls. Yeah, they call that the continuous contract. So right now they're on the Maze, and you can see actually we're a hair below that $1 level. So it looks like we've made a run at it today. And as I said in this morning's post, and I still maintain that will be when we can clearly put that in the rearview mirror, pop above the $1 level, take it out with conviction. I think that'll be bullish. We will have regained a key level, which we're, from the bigger perspective, we're only slightly below it. Remember, $1 was support, so I have to acknowledge that we went below it. I showed you on the chart, but at 3%. See, from $1 to 97, that's only a 3% drop. Relative to the move in coffee prices, that's not too bad. So, again, little work to be done, and you can see on my this other version here from Interactive Brokers, I have an alternative downtrend line. Comes off these couple highs, reaction highs there, and we've hit that now, right around with that close to just below the $1 level. There's some resistance, so a little more upside should do the trick. But with that being said, and I mentioned this in that original update, this happened with the UGAS trade recently. Futures are what the ETNs are tracking, except the ETNs don't do a perfect job. They have contango, they have fees. They're trying to roll the futures, and so The rub here is that I know a lot of traders don't have a futures account, don't have the experience or the capital or just the ability, access to a futures account. So I always use ETNs, ETFs, or individual stocks as the official trade proxies. So I want to make mention that if you're a futures trader, that's really where we should run if we can pop above these recent highs. And again, it's hard. Sometimes I do a good job. I try to do a good job of correlating what level, what breakout in the futures will correlate to a breakout in the ETNs, and or for stops. So, for example, on that last UNG trade, I maintained I liked it all along, but the stop was just barely clipped on UGAS. What I say, UNG? UGAS, UGAZ. But the trade went on to play out as expected. In fact, let's look at natural gas. And if I don't get to the indexes in this video, because I'm showing you what stands out, what I like, there's nat gas. Nat gas was the same story as coffee. If you remember, I based this trade off long-term support. Look at this long-term support on nat gas. When you have a commodity fall to a support level, it just couldn't be any more better defined. This goes back to 2016, and then there's even reactions to the left there. So that was the basis for that trade, and you can see now it's certainly moved off that level. And I know a lot of you stuck with it too, with UGAS. Again, suggested stops are just that. And like I said, all along, the bullish case was still always intact. This was a breakout where we took it, and then we came back and we just made a simple double bottom, a test of that recent low. Didn't even undercut it. Kept the divergences still intact, just expanded them a little bit more, the bullish divergence, and boom. So we had a little minor trend line break here the other day. We broke it, and we're back testing from below, but we're still moving higher again because this reversed off long-term support. But I think the risk reward, this one could certainly go higher because I made the case for a bottoming play, but seasonality is not with you right now on that gas. We're heading into the warmer months and all that, and this is a significant resistance level. So again, I maintain that it's prudent to book profits, especially if you get up to that 290 level on that gas. So going back to coffee again, you can see some near-term targets. And as I mentioned, coffee doesn't really lay idle for very long. There are exceptions to any rule. Here was a kind of a choppy trading period, but it was still in a downtrend. In other words, they don't trade sideways very long. You tend to have these pretty unidirectional trends, and sometimes they can be explosive or implosive too, depending on which way it's going. So that's just the nature of this beast. And again, these are all big moves within the larger trend. This is a daily chart here. And this is where 60-minute charts tell you to, hey, you might get a little bullish falling wedge or some divergence there, indicating the pop, and trade the primary trend, or I should say a counter trend trade against the primary. And gold, I made a front page post on gold today. If you recall, in the recent one of the earlier this week, trying to do more of those charts I'm watching today. I outlined this symmetrical triangle pattern in gold. You can see we had one back here. There's another symmetrical triangle pattern. Those are indecisive patterns, and they can break either way, and you just respect which way they break, and they're good for quick trades. There was a breakdown. You could have shorted gold. That would have been a natural target, that line I had right there. That's where I would have covered if I was in it. Can't even remember back then. And again, you can see little trend lines that work well, especially when you can couple them with divergences, things like that. This time around, we have bullish divergence. So again, last from the other day, I said one of two things, upside break, trigger a buy signal, downside break would trigger a sell signal, take us down here. That's what we hit. That's the target. We bounced back tested the wedge, both pretty much the apex, meaning we had dual resistance, the downtrend line and the uptrend line, reverse from there. We hit this support today, and I'll tell you, I took a shot at a long here, and I'm going to start scaling back into gold in long-term accounts. This is also a swing trade, but I'm going to get to the daily charts here in a second and show you. So what I want to point out is we have potential divergence right now. I call it potential because the MACD and the PPO are still pointing down. They could take those divergences out, but if they do reverse, then we could get a nice pop in gold here. And more importantly, what goes into my decision making too is the daily chart of gold. I also posted this in the trading room and on the front page. Now, if you recall in recent videos, or really take it back from the beginning of the year, we were bullish and long gold from right here on October 11th, went long gold, sold it here, the final target. And since then, I said I'm out of gold, even my long-term accounts, because I expected at least some consolidation or a pullback. And some of the things giving me pause, even though I'm longer-term bullish, we had this divergent high I mentioned. Even back here before we had it, I said if we pop up, take it out, we would have a divergent high on the daily. You don't mess around with divergent highs on the daily time frame. They don't have to play out. They don't always do, but more often than not, they do. And therefore, this one played out. Then I said we'd have a sell signal if this trend line was broken. We had this rising price channel here. That coincided with that 60-minute wedge breakdown. So there was your sell signal on the more significant daily too. Now, where am I going with this? I like gold. I said it before, 122.40, and I might even add this one on as a long-term trade here soon. Back as a long-term trade and or swing trade. So 122.40, as you can see, is support, and again, even though, yes, we just broke down with a pretty significant divergent high, I see one of two likely scenarios. Well, several, but we could reverse here soon. Sometimes when you have longer-term bullish technicals, example, the weekly chart, the bearish patterns on the short-term time frames don't play out as much as you might normally expect. And so we could reverse here. There's a 50 EMA coming up as well right there. 122.40 is that number. I'll have to revisit this chart a little more. Yeah, there it is. You can see about 120 is the next support. So we could go a little lower. Worst case scenario, unless something else is going wrong here and the longer term outlook is not bullish as I think it is, 117.40. So for long-term accounts, and this is my thoughts and my plan personally, is scale in from here all the way down to, but not below that 117.40. I do not want to see that level taken out. I think it is significant. I think if it does, something else is going on. So that would be a scale in there. And of course, you can swing trade off these levels in the 60-minute chart as well. Bigger picture on gold is this. Here we had this big, giant symmetrical triangle pattern we broke out recently. But I think I laid this out too. We were pretty extended to get there. I don't chase breakouts to new highs or breakouts above bullish chart patterns if they're overextended. In fact, as I said, I was long and got out a little before the top because of what I saw on the daily and this. Here's a weekly chart we're looking at. You don't get overbought very often on the weekly. And when you do, you know what? There's usually a correction unless the trend is very strong. And the larger trend hasn't been that strong off the lows. This was the lows back here in late 2015. So that breakout, in my opinion, I think I laid out at best, we'd maybe go up to 130, that my next target at 130 or so, pull back test. But we've already, in other words, gold's expended too much energy just to get up here. The same way I think that the U.S. stock markets have expended a tremendous amount of energy to get up to those key resistance levels we're at. So like I said, I have, I think the risk reward, at least in the near term, even best case scenario in the U.S. markets, is they have to work off the overbought conditions. So what gold is doing, it's coming back in and back testing that trend line from above, which could offer an objective long entry, but sometimes even if it holds, you may come and test it, for the next few weeks at lower levels, and that would be those levels I showed you on the daily chart before the next thrust up. And then this breakout, if and when it comes over 130 or so, I think would be massive. That's just a big level, big basing pattern in gold, and you do not want to try to short if that happens and we get into this mode here, you don't want to try to game the counter trend pullbacks for quick short trades. You just, at least in my opinion, hold on and ride gold up to that 151 or so level. SLV, it's related, and somebody asked about it in the trading room today. Not happy about this. So far, rejection. I'm trying to break out of this downtrend line here. You have a downtrend line off the highs. There was your similar symmetrical triangle pattern, if you will, on silver. Remember, gold, they're both considered precious metals, but they're both also industrial metals. They have industrial uses. And gold, of the two, has always been the more a flight to safety instrument. A lot of people are concerned about the U.S., this tremendous printing party, the debt we're accumulating. And so I think you're seeing part of the reason you're seeing a flight into safety in gold is a way to diversify portfolio. Our stock market, we all know, is getting very frothy. And then also the debt issue and what might happen with the dollar going forward. So money's been going into gold, more of an alternative asset to really hedge against those things I just mentioned. Whereas silver, not quite doing the same thing, but I'm giving you a key level to watch, that downtrend line. Look for a significant breakout above that downtrend line. That should be quite bullish. This one may come into play here. Maybe we back test it, but that's the daily chart. still see this, the PPO. It's crazy how it works on all different time frames from the 60-minute out here to this weekly chart, but it defines trends. That's the 9 EMA, the signal line, the white line. Crosses below the trend, it's telling you the trend is bearish, the primary trend, bearish there. Crosses above, you have a bullish trend. That was a nice rally in silver. Cross back below, and it's been below since, saying the trend is bearish, but watch it. Watch for that break. So two things will tell you that we may have shifted to a new primary, and that would be early in the cycle, a new uptrend. That would be a breakout, definitive, impulsive break and weekly close above that downtrend line, and that 9 EMA putting that zero line on the PPO clearly in the rearview mirror. And now down to the daily chart, which is more useful for timing entries and exits. Let me see if this downtrend line, yeah, let's extend that downtrend line there. So here's what I'm watching. This is what I posted in the trading room. I'm doing this video so silver members can see that too, and I'll maybe put an update on the front page. The trend line's not as well defined as the one on gold, but you do have a similar pattern. And like gold, you had the divergent high. So this told you, recently if you were in silver and you caught some or all this run like gold, yeah, the risk reward wasn't good. Plus, silver had a mountain of resistance right here it ran into. That's this trading range back here that I have boxed in. So that was just a natural, the resistance level. And it tried that a couple times and failed, put in that little doji. Anyways, went on to break down, and the divergent high did play out. Took a little while. Took two tags of it. That divergence was simply extended to this point right here, down to here, if I extend those lines. And it's played out for a correction. Now, but look where it's come, right down to that 1443. I've had that level on my chart since before we even crossed above it. It was former resistance, and it's certainly valid. We broke out, and we came in to backtest it. Resistance, once broken, becomes support. TA 101, boom, rally from there. Now we've come back to it again. Does it guarantee it'll hold? No. We're cracking a little blow at midday, but not enough on a daily candle to be concerned at this point unless we print a solid red close. So what I had said in the trading room, I think it is objective, very objective, especially for a long-term swing trader, trend trader, to scale into silver at this point between $14.33 and $14. It is a bit aggressive because I showed you the long-term trend is still down, and we're below that. Well, the trend has been up for a while. I should clarify. Even though we're below that trend line I showed you on the weekly, we've been moving up for a while in silver. So the intermediate trend is clearly up. And so that is and will be my plan, is to scale from $14.43 down to $14. Not a very big window, but not below. There are a lot of traders out there. Professionals will only add to a winning position as it moves their way, but others, including myself, if my plan ahead of time is to scale in, I will average down on a position, but not two, because if we go below this strong, this was a very solid basing pattern, and we broke out, and we haven't even back tested it yet. So if we come back in now down to 14, we back test it. So I will be glad to accumulate silver in my long-term accounts from $14.33 right now down to $14, but not below. And I'll just layer out with stops if it were to move below that level. Okay, I'm not going to get to the sectors in this video, and since I'm not going to do that because it's gone too long, I'll do that in a separate video follow-up. I'll just do an update since I'm on the precious metals, spent so much time on gold and silver. Let's look at the other ones. Here's platinum. We've had this as a long trade. You've probably heard this many times. We entered it back here way back when, quickly hit our first target, missed our second target by just a hair, reversed just shy of that level. And so for all intents and purposes, it really hit the resistance. I mean, I didn't count that. I kept the trade open because it didn't hit the final target, nor did it hit the stop. And in recent updates, I said here was a level. It was really wanting to hold this support line right here, which it did, and then boom. So that's why you sit tight and patient on these trades. And, I had a trading plan, nothing compelling in the charts. I did mention back then that if it broke this line, you'd probably see a correction, and it did. But again, bigger picture, get rid of all those trend lines. Bigger picture is this. Platinum's been basing here. And I may even extend the targets on this trade because if we pop above the top of this basing pattern, it could really run. There's a downtrend line as well. You can see. So that's where we're at, and I've still left this target on 83.40. We reversed just shy of that previous reaction high so far. Hopefully we'll get another thrust up. If I need to call this trade in early, I'll take a look at the 60-minute charts later and maybe, close it. Sometimes I will close a trade out early just if I think it might be dead money. I didn't realize this one or didn't think it would be dead money for so long, nor did I think we just barely missed that target. But either way, it's played out and we're still very profitable on it, and we never had our stop hit. The other one is palladium. Palladium, which is now more expensive than gold. They're ripping palladium. They're stealing exhaust systems out of cars to pull it out of the catalytic converters. I've read right now. That's how high palladium is. It's just focused on it or highlighted this chart recently. We had some divergences and they just haven't played out. But again, divergences are not sell signals. We still have it on the RSI, about equal, almost equal highs on the PPO. But the important thing is the trend line. That's the thing, and it's remained above trend. It's in a clear price channel without any sell signals, getting toppy. Now, one thing to look for, maybe an island cluster reversal pattern. We have an island there. We had one there too. Pop to the upside. You're going to have islands more so on these metals because remember, they trade around the clock, virtually around the clock. The futures do. And that's what these ETFs are. This one's an ETF tracking. So it's not unusual to see gaps in these. Here's another island. And that was an island top, but it didn't really pan out. So see, there's a case where, but again, to take a short there on that island top, anyways, why do it when you have key trendline support just below? And that's what happened. It hit trendline support. So that's why you have to look out and try to identify as many levels, salient, important levels around to either refute or confirm a trade. So in this case, you can look for maybe a gap down, but then you really want to see a break, an impulsive break in daily close below this trend line to trigger a sell signal on palladium. Right now, I don't have an opinion. It's too high for me to chase, and there just aren't any sell signals in it. The trend's strong, and it's still most importantly above trend. So just keep it on my radar for now. And to wrap it up, I don't think I covered crude in the beginning. I know I covered it in this morning's update and had a member that mentioned this trend line. I didn't have that on my chart. Here's another potential trend line off the lows from the 24th. And but what I was watching for the next sell signal, and I posted in the trading room right after, or maybe it was below that post that we did. We broke down this little small wedge. So, it's a wash, rinse, repeat thing. Divergent high, short. Divergent high, and again, the shorts come not on the divergent high because that can keep going. It comes on the break of the trend line. So this one was a breakdown and a back test to put in a slightly marginal higher divergent high, then a nice correction. Nice clean wedge, well-defined trend line, clean divergences, breakdown, little back test, horizontal support broke, boom. And that's where we're at now. So we reversed that one. I thought we'd come down. This was my target. We reversed a hair shy, but this is still my target at this point in time. But you might want to also watch that previous reaction low. So that's crude oil. Let's wrap it up here. I think that's everything I wanted to cover right now. And again, I want to follow up on a video on the sectors of the S&P 500. I'll try to get that out today before the close. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.